Thank you for watching this preview video at xm.com. We'll be discussing the upcoming US PCE inflation data and the potential reaction in the dollar. I'm Maria Pashurdavis, and joining me is lead investment analyst Rafi Boyajian. So Rafi, the CPI measure of inflation has been sticky for some time now. But will PCE inflation data due out on Thursday help ease worries? And how might this data impact the market outlook for Fed rate cuts?
Well, Maria, as you said, we've had some worrying inflation figures lately. We had our upside surprises in both the CPI and PPI numbers. So there's a lot of anxiety ahead of the core PCE. Of course, the core PCE price index is the Fed's preferred inflation metric. This has the PCE numbers have been a little bit more encouraging. And in actual fact, it kind of contributed to why the markets were kind of so relaxed about late last year and at the beginning of this year, why they were kind of so relaxed, despite the fact that we were getting, we kept consistently getting strong economic data out of the US. Is because when we have a look at the 6-month annualized rate of PCE inflation, which basically looks only at the past 6 months, and if you annualize that, we were getting around 2% inflation for the headline and core PCE numbers. In the actual numbers, though, were a bit higher. The core PCE stood at 2.9%. That is expected to have eased to 2.8% in January, so that would be good news. But if we have a look at the month-on-month number, that is expected to have accelerated a little bit to 0.4%. So we're not quite in the clear yet, as Fed officials have been saying themselves. It's too early to declare victory. So basically, should we get any further upside surprises, then that could really spook markets, and it might even start to raise question marks about whether or not June might be too early for the Fed to start cutting rates.
Now, alongside the PCE price indices, the latest numbers on personal income and personal consumption will also be released. What are we expecting there, and how might the dollar be affected?
Well, that is right. We're getting income and consumption numbers as well. Personal consumption is important because, of course, the US is a consumer-based driven economy. Despite the fact that we were expecting the fourth quarter to have seen a slowdown in consumer spending, we didn't really get that. But we may start to see that now because personal spending likely slowed down to 0.2% month-on-month gain, and that might ease concerns about an overheating economy. But should we get an upside surprise again, I think we could be back to a situation where the Fed is probably going to maintain its higher for longer stance. For the US dollar, on the other hand, I think we would have to see a really strong number, because if we have a look at market expectations, we have seen a significant repricing already. So there isn't that much room to go, because markets are now expecting about 3.5 rate cuts. The Fed has signaled 3 rate cuts, so there's not a lot more room to go for further repricing. So we would have to see a significant upside beat for the dollar to take note. But the other reason, of course, why the dollar has been held back despite the strong data is because we have had risk-on sentiment in the markets. So should this data be strong enough to spark some risk off or something else trigger risk off, then that would also benefit the US dollar.
Rafi, thanks so much. This was a preview video here at xm.com.